In the most basic definition, an uptrend is price moving upward and a downtrend is price moving downward. However, as we dig deeper, we see there are some basic building blocks for trends which must be broken down. In the previous lessons, we talked about swing highs and swing lows and how they connect together to create segments within each trend, whether it's up, down, or sideways. In this lesson, you will learn how segments connect to form a trend. A simple approach to trend analysis is to focus on a series of at least 3 segments. While trends indicate a consistent movement of price in a certain direction, there are pullbacks and corrections or retracing in the opposite direction of the dominant trend. Let's look at the basic elements of the 3 different trends. Uptrends are composed of higher swing lows and higher swing highs. Looking at the trend analysis example below, we have segment 1, which is a strong impulse move to the upside. Segment 2 is a correction which does not move beyond the prior low. And segment 3 is another impulse move to the upside which breaks above the previous high. A downtrend consists of lower swing highs and lower swing lows. As you can see, segment 1 is a strong impulse move downward. Segment 2 is a correction which does not break above the previous high. And finally, segment 3 is another impulse move downward, moving lower than the previous low. A sideways trend shows relatively equal highs and equal lows in price. Sideways trends may also occur with conflicting highs and lows, either a higher high or a lower low, or a lower high and a higher low. These are much more trickier market conditions, and we'll go into those details later. It's important to understand that a trend is made up of 3 segments, not just one. Often we'll see a few of the candles dropping and rush to the conclusion that price is in a downtrend, when in reality it could just be a minor pullback within the context of an overall uptrend. So with that in mind, we don't want to assume that the trend direction is based on one segment alone. Now you should have a basic understanding of how swing highs and swing lows, up and down segments form trends. In the next lessons, we'll look at the specific combination of segments that form an uptrend, a downtrend, and a sideways trend. Before you move on, review and memorize the 3 segments and corresponding terminology associated with uptrends. Also, review and memorize the 3 segments and corresponding terminology associated with downtrends. And then finally, review and memorize the 3 segments and corresponding terminology associated with sideways trends. Hope to see you in the next video.